Hello guys, this is fairbinaryoptions.com, and I would like to take a look, or to take a closer look, at the Australian dollar, Canadian dollar, as it is forming a so-called bullish pattern from my point of view, and that means that market is about to pop a bit higher. Now, if markets are about to pop higher, whatever we want to do is not to stay in the way, and of course we would like to look at the long side, or we would like to buy call options if you want. Now, these call options are coming after we have nice five-way structure from the lows. So from here to the upside, I would say that price forms a beautiful impulsive move that goes like this: 1 and 2 and the third wave all the way down here, the fourth and the fifth. It is impulsive move, it is impulsive move. Do we have an extension? We do have an extension. So five-way structure here. So this would be the end of the first wave. Well, if this would be the end of the first wave, then where would be the end of the second wave? Well, definitely not here, as we have a move to the upside that is simply channeling too well. Now this move, or such a move that is channeling too well, from here to here, like this and like this, implies that it is only a corrective wave, and I would say that it is being formed out of a zigzag, and the zigzag goes like this. So this would be the first wave here, and then we have a flat in the form of wave A to the downside, of a different degree, of course. Then to have the B wave all the way to the upside to here at this end of this contracting triangle. Then to have a C wave all the way to the downside here, A, B, a C in the form of an impulsive move, the C wave, and the whole pattern here is being called a flat. Well, if this is a flat, then the move that goes, this corrective move here, can only be an X wave, and I would say that our X wave ends here. So if this is A, B, C, and X wave ends here, what is the structure of this X wave? Well, the structure of this X wave goes of being wave A to the downside here, of a lower degree, of course, so we'll make it of a different color. The B wave to be done here, and the C wave to the upside, and this is being called a zigzag, A, B, C. Then market needs to go and make an X wave, but the X wave is not here. It's just wave A to the downside, B, C, D, E. The X wave ends here, and the X wave is being called a running variation of a contracting triangle. Quite a powerful pattern for the X wave, and it implies of this degree that a top is about to come. Well, the top, so this will be the A and C, not this one, sorry, but this to be the A and C from here to here, and from here to here, like this. And this kind of triangle has a way bigger thrust, and therefore a target for the move to the upside. So A, B, C, then we have an X wave all the way there. Then we need to have, of course, the second ABC, but out of this degree, out of pink. So it will go with A, it will go the B wave, and of course it will go the C wave to the upside. Now, what is the problem with this pattern? Well, the problem with this pattern is the thrust of the triangle needs to go more than 161.8 when compared with the longest wave, but the longest wave here in this A, B, C, so the longest wave here is this one here, and either this is ABCX, ABCX, and then the triple zigzag most likely in this case. This is why I hesitated, because market was doing something that was not, let's say, fitting. So ABC, X wave, then another A, B, C, and then the X wave as a running variation of a contracting triangle, and with a thrust completed, and the X wave out of this degree is completed here. Now, what do we have to the downside? Well, we have out of this degree a wave A, like this. Then we have a B wave to the upside, which I would say there is only this one here. Then we have what? Then we have a C wave that goes with this one being the case. So A, B, C. What I'm trying to say is that it depends very much what market is going to do from this moment on, but this looks to be double 3 running and an extended move to come. Now, if this is going to form another running variation of a contracting triangle, and this implies that these highs are going to be broken, then no problem, we'll look at the 10241. If the market will form only a triangle here, then we'll look for like a horizontal triangle, then we'll look for the B2D trend line to be broken, and when it's broken, we're just jumping on the long side there. Long story short, we would like to buy call options here, either if this is a running variation of a contracting triangle in the end to complete the second wave out of this degree here, or this one ends up being a horizontal contracting triangle, an irregular actually variation of a contracting triangle. It is exactly the same. So let's write on the screen that we are looking to buying call options, looking for buying, not looking, buying call options with end of week expiration date, and end of week expiration date being, of course, Friday by the time the US markets are going to close. Thank you very much for being here. This is fairbinaryoptions.com, and all this analysis and recommendations are possible due to the help of our sponsor here, Lionel. So make sure you check lionel.com. Make sure you check also the fairbinaryoptions.com on our Binary Options Academy projects, as we explain there a lot of theoretical and fundamental concepts. Bye bye.